5-star copies all. Go ahead. Message to observer. Alpha 3 rounds. AT delay in effect. 3 guns. Bravo 2 rounds. 2 guns. Smoke on effect.
Hey guys, what's going on? Thanks for watching. This is Andrew from the Options Millionaire community. If you are new to the channel, hit that like and subscribe button so you get notifications for all future content, as well as our Monday, Wednesday, Friday live options stream. So the most common question I get asked is, what is your trading strategy? Can you summarize your trading strategy for me? And honestly, it's a difficult question for me to answer because my system is so simple. When people ask me that question, I'm sure they're expecting some technical, long-winded answer that's pages long and all these different variables. But honestly, it's not like that. I keep things very, very simple. But if I had to boil it all down to one phrase, it would be risk management. Minimizing my risk to the max extent possible while maximizing my profits to the max extent possible. This year has truly tested my system because of the egregious sell-offs and buy-ups and reversals that we have had since December of 2021. The past 6 months have been an amazing test of a trading system, and mine has definitely come out on top. As of June 12, 2022, I've been able to net 260% overall account returns in this year alone, which I consider to be my greatest achievement in trading due to the nature of the market. I wanted to make this video to showcase one day in particular. Now, if you follow me into the server or anywhere else, you know that I don't really talk about my account balance or dollar gains because I don't think it's conducive to learning. I don't think someone who is new to trading needs to have a very large account balance shoved down their throat when they're trying to learn. I think it's discouraging. However, in this video, I am going to show you position sizes and dollar amounts just so I could showcase that you can make a phenomenal amount of money without having to take large position sizes, because that's what I do. I do not take large position sizes. In fact, not once this year have I taken a single position size over 10%. Yet I'm still able to return 260% on my account and have days like today that I'm going to show you where I netted almost $50,000. Nearly $50,000 while taking very small position sizes, even way less than 10%. In fact, they were very, very small position sizes. Why? Because on this particular day, I wasn't quite sure that we were going to have the big movement, so I was building into positions. The day was May 18th, 2022, and it is this red candle right here. Now, this is a 3-minute chart for that day, May 18th. Obviously, we had a very large trend down day. We had a reversal off a green upward momentum on the 16th and 17th, and then here is reversal to the downside on the 18th. And obviously from pre-market, we sold all the way off all day long, never actually breaching the 34 EMA, which is the purple line here. The two vertical lines you see is the open and the close, right there and right there. The times are in central time. But you can see it was a very strong trend down day. Now, what most traders want to do is put on a very large position size and hold it because they want that big 800, 900, 1,000% gain on a day like today. They'll play a 0 DT position, a large position, hold one position down, where that is quite risky. Although sometimes in this particular day, that would have paid off quite well. But a lot of times you may get reversed, or you may face a day where we have come down and have a V recovery, or it may not quite be this straight down. We'll have a lot of oscillations in price, and you'll see a lot of drawdowns and a lot of stress and a lot of risk. And it's just not a good way to trade long term. So what I prefer to do is trade into the strength. And the strength here is to the downside. We have a very large sell-off. So if, for example, you want to be playing puts or shorting futures, which in this case I did both, and I'll show you my transactions here in a second. So in this particular case, what I want to do is continue to put on additional risk. And as I see the day continue to break down, I want to put on additional positions. And in this case, what I did is play hopscotch with my strikes. So up here, when the price is 40.30, I was playing 40.30 and 40.20 puts. And then as we come on down, I start playing 39.30 puts, 39.50 puts, and all the way down and down and down, just adjusting my strikes and adding more and more risk. Every single position size was very small. I mean, 3 to 4 to 5 SPX contracts at a time, and just kept building into the strength because I knew they were sold off. And then, as long as we held under the 34 on any kind of upwards momentum here, which we did, and then sold off, we know that it's continued to be trend down until I see the indications that we're going to reverse, which we never got today. And I'll go ahead and show you, these are my transactions right here. You'll see that there's a lot of different tickers here. I've got SPX strikes from 39.20, 3900, 39.20, 40.30. I take a Tesla put at 740. a 39.50 put on SPX. I even placed puts on XLE, which is energy. I caught the top on there. And then I saw a big position that I took the day before, a 40.50 put that actually went up to 846% gain. And the big one that really pushed me over the top is I shorted futures at 40.43 and then covered at 39.30 for a little over $11,000 profit on that one. And all in all, for $48,425 profit on this one particular day. Never once putting on any considerable risk on my account at all. Why? Because yes, it was a trend down day. Once the day was about halfway through, I was confident that we were going to continue trending down. However, I wasn't necessarily sure that this was going to be a sell-off day because we had a lot of bull action going up into this day. So that's why I was playing small. But it just goes to show you that on a day like today, playing a very small value part of my account, I'm able to return almost $50,000 just by playing small position size. Now, yes, in hindsight, I was kind of kicking myself because I didn't identify a huge trend earlier and play a much bigger position size because I could have made a lot more money. However, I was still very happy. I mean, 50 grand is still 50 grand, even playing small position sizes, micro position sizes on the way down. And I will say one other thing. A lot of people ask me about futures and options trading. When do you trade both? When I identify a trend like this, I want to put on a futures contract as early as possible. Why? Because one, futures have no theta. So futures are not affected by theta. So I could short a futures contract, set a stop on it, forget about it, switch over to my brokerage account, and now I could trade futures all the way down, knowing in the back of my mind that as long as this continues to fall, the values of my futures account is continuing to grow because the futures are coming on down. And now all I have to do is worry about managing my options. The futures have a stop loss on them, so if this were to bounce, I can have a stop loss set, completely forget about it. And then as we come on down, I can continue to set that stop loss on the futures lower and lower and forget about the futures contract. Now, I'll kind of talk a little bit about what made me stay in these positions. Yes, we talked about how I executed the day, but let's go into some technical analysis on how I continue to identify that the position was going to fall. So firstly, I'm watching the entire market. Now, this is my watch list. Obviously, this is not the data from May 18th. This is current data. But my watch list is very intentional. I monitor all of the top SPY holdings. I monitor the SPY sectors. And then I monitor the futures as well as the global market as well, which is down here, the global markets. Now, everything on this particular day began to sell off very early. I'm talking at 6:30 Eastern time, 5:30 Central time. The markets began to sell off and adjust. And when I see the sell-off action into the open without any kind of retracement, it's going to start looking heavy, especially when the entire market is doing this type of price action. That's why I began to short at 40.43, which is right here, and start selling off. And then as we continue on down, I'm watching the EMAs. On a trend day, the 8 EMA, which we effectively call in the Discord the Lee Rat Special, we bounce off of the 8 EMA on the way down. Now, if it's on the way up, we'll bounce off the 8 EMA on the way up. We ride the trend all the way down. In this case, every time it comes up through the 8, I'm watching to see where it actually is going to reject. So we're riding the 8 all the way down. We come up, sometimes we tap the 21, but we never actually get to the 34 until very late in the day. So in this particular action, when we come up and touch the 34, I'm looking to see how it's going to react. In fact, the first touch of the 34 EMA is probably going to be a rejection. In fact, I know I added a put right here on the way down. And of course, that's exactly what we do. Now, every successful opportunity after that we touch the 34, it's a little more chance that we're going to break through the 34 to the upside. But in this case, we never actually bust the 34 until the very late in the day. We finally do it after everything starts to flatten out a little bit right before the bell. But you see, this is a very strong trend down day. That's why as long as it respects the EMAs, as long as that 50 simple moving average continues to point down, the things are trending down. The second I start to see the 50 simple moving average start to curl up, or at least start to flatten out, there could be a possibility we're going to bounce a little higher. Not to mention, I'm also watching different time frames. I'm going to the 15-minute, I'm going to the 30-minute time frame, and the 60-minute time frame to focus on when the trend is telling me. I am a price action and a volume analysis trader, so the price action to me is king. I'm watching the candles across all different time frames to really tell me that the price action is continuing to fall, and then I'm corresponding with the sell action. Every time I see an algorithm sell like this where it comes down as well as the corresponding strong sell volume right here, that's a very strong indication that we're going to continue on down until I see the buying volume start to come in here. We have a little buying volume come in here late morning, immediately sold off, and that's an indication that the sellers are still very much in control. In addition to the price action, in addition to my watch list, I am watching Bookmap. And this is Bookmap for that particular day. In Bookmap, this was right at the open. We see that immediately right here when the bell rings, there's a huge level put on at 40.25 right there, which is lower. And then they start building lower and lower and lower, 4,007, 4,000. And then they start building in this ladder well below into the 39.70s all the way down to 39.47 that was not there the prior day. So seeing all this overwhelmingly amount of liquidity to the low side, while very little to the upside, is a great indication that the market is going to continue on down. We had this level at 4,100, but that was been there all week prior to that day. So the good indication that we were going to continue selling off down at least until 4,000 was pretty high. And then if we took out 4,000, I was going to see how this thing goes. And that if we were to hit play, I'm going to speed this up a touch, we'll see that this continues on down, and every time it breaks through a level, we put on more liquidity down to the downside. And here's that sell, and you see the 39.90 start to pop up. And then you see the 4,000 start to get stronger. And then you see this 39.80 start to pop up. And down we go. And every time we break a level, more liquidity gets put on to the downside until we finally break that 4,000 level. And then we come on down, and every time we breach a level, more liquidity is put on lower. And I'm monitoring the upside, which is nothing. And I'm monitoring the downside, which is here. And this is where Bookmap really shines. When you monitor the liquidity on a trend day, and you start to see that all liquidity keeps put on lower and lower and lower, 39.50, you can continue to ride these targets down and adjust your strikes as needed. So now I'm going to start playing 39.50s, which is what I did. I started playing 39.50s because that is going to be at a decent target. And until the liquidity starts to come on top, then you know that you can, with confidence, play the downside. Now, there are times when this action like this happens on Bookmap, and then midday we have a V recovery. What I'm looking for on a V recovery day is that as this is falling, you're going to start to see a level being built somewhere up above. It could be a strong level, it could be a weak level, but I'll start to monitor that level. And usually it's pretty strong. It's a lot stronger than what we're seeing here. It's going to be something like this, except a larger number of orders. And I'm watching that liquidity level start to build, and that's a good indication that we're going to have a V recovery up to the upside. But as long as Bookmap is pointing down with nothing really above us in the immediate future, then I think we're going to continue on down. And that's what I did. I kept monitoring this, and this continued to fall all day, all the way down to 39.30 and below. Look, you see that? 39.40 being leveled, being taken on, put off. Strong indications we're continue to fall. And as long as I keep seeing this type of action, I'm going to keep playing the downside. Now, could I have been wrong? Sure. But playing the trend is always your friend. Always. As long as I see a trend, I'm going to continue to play it until she bucks me. So I'm going to keep playing puts on the way down. I'm not even going to worry about scalping calls on kind of movement like this. Just continue to play puts to the downside. And then if I'm wrong on a recovery, cool, that's fine. I will close out the put, and then I'll start looking at a recovery play like a call. But until then, I'm going to play the trend. Playing your trend is always your friend. So even if I played, for example, here, another touch of the 34, if I played a put and then we V recovered up, that's fine. I'm okay with that play. I'll put in my risk mitigation measures. I'll set a stop loss. I'll execute the closing of the position, and then I'll start playing calls to the upside. But as long as all indications are playing with the downside, I'm going to play the trend down and reap my profits. So to summarize what we saw today, I'm going to give you 4 rules that I followed to yield almost $50,000 while staying very safe. Not once could the market have reversed on me and wiped out a huge portion. A little bit maybe, but not a huge portion. I would have kept most of my profits had the market reversed on me. The first one is small position sizes. Never once did I put all my eggs in one basket on one position size. I took several puts on the way down, all very small to yield very large percentage gains. 2, I built into different positions. As we went down, I just built further different strikes, different puts. I built into more positions, several positions with different risk tolerances, different deltas, different gammas, where I could execute those positions. 3, I monitor all my different tools for indications of a reversal. Now, I will say you need to have very intentional tools. EMAs alone or technical indicators are lagging in nature. They're not going to help you identify a reversal upcoming. They will identify a reversal in the past, but not upcoming. The tools I mean are my watch list. The market itself is your number one best indicator. Having a very intentional watch list. Number 2, a tool like Bookmap, a liquidity-based tool that is going to show you the active liquidity in the market. You can also monitor the options chain. The order flow is going to be very telling in the market itself. Only then, after you've monitored those tools, can you rely on technical indicators like things on the charts, because these are lagging, these are live. And number 4, of course, play the trend. So many times the amateur trader wants to look for the reversal. They want to play the counter trend play. They want to play the calls for reversal or the puts on reversal if this was a trend up day. They never want to just accept the fact that we're in a trend, and they want to play the position down because they're like, oh, the second I take a put, it's going to reverse. As long as you're doing your due diligence, you're not going to get reversed that often. So play the trend. And then if you're wrong, cool. You're still making a smart decision that's going to keep you profitable the most of the time. Play the trend until the trend breaks, and then you play the other position. But stop playing counter trend positions. That's what the amateurs do, and that's why you lose so many times. So that's really all I got for you guys. A good video to showcases a great day on how I mitigate risk to maximize my profit on a trend down day in a very tumultuous market. Thanks for watching. If you have any questions, please come over, join the Discord. Anytime you can DM me there. I'm there a lot of the day. I can answer questions directly. The link's in the description of the video. I am now a partner affiliate of Bookmap. I've got a Bookmap affiliate link in the description if you want to be a part of that and get some money off of your subscription. Click that link, follow it. Come follow me on Twitter. I post a lot of updates throughout the day. If you are not in the Discord, the link's also down in the description of the video. And then, of course, hit that like button and subscribe so you could follow along on our Monday, Wednesday, Friday live options trading and learn how to do this live. I'm Andrew with the Options Millionaire Community. I appreciate you taking the time to watch this video. I'm out.